This conference will now be recorded.
All right, welcome everyone back for another little video on one of our high growth themes. I have the distinct pleasure once again to speak with Mark on another topic, and today we're going to look at one that I think has been in the headlines quite a bit, and depending when you're watching this, might be in the headlines even more, and it's on EV, electronic vehicles, or and everything that goes with that. Um, it's one of those themes that we really think is at this juncture here in time is really reaching a point, as are all of our growth themes we're looking at, where it's really just about to accelerate in a very meaningful way. Um, a lot of actually all of the major auto companies have fully committed themselves to that trend, and we think there's a lot of opportunity here to benefit from it as an investor. And it doesn't have to be difficult. It can be very straightforward, as easy as buying an ETF. But we want to give you some perspective on this, just quickly, so you know the two major ETFs on this, and then I'll let Mark give us his wisdom. Are LIT and ICLN. I've just got it up here on this term sheet that I'll get back to. LIT and ICLN are two ETFs that you can look at for this. But with any further ado, Mark, welcome,
Yeah,
and
hi.
let us know why you're so excited about this renewable energy uh,
Right.
theme.
So, hi everyone. And Serge mentioned the EV space. I see that sort of just as one of the subsets to the bigger renewable energy growth theme. And so, if we take a macro view of what's happening, we've seen in the last decade a clear pickup in the energy mix globally. So we're seeing more and more energy being produced either by solar or by wind. You can see that from the chart that's on your screen. The growth rates are phenomenal, and we're expecting that by the year 2030, 80% of all energy will come from renewable sources. We're also expecting that approximately 3/4 of the 12 trillion that's invested in power technology through to 2040, 3/4 of that will be in renewables. So there's a demand change in the energy mix, and there's this clear change in supply mix that's happening as well. And on the demand side, it's driven by areas such as the electric vehicles that Serge was mentioning. So this doesn't mean that fuel oil is going to disappear in the next 5 years, but you can clearly expect the growth in those areas to considerably diminish. And here, the second chart on the following page gives you a very clear view of what's happening in the EV and plug-in hybrid space. We've got this exponential growth. Just 2020, we had 43% growth, and yet we're still only at 4.2% of the entire vehicle market share
That's incredible.
that's represented by EVs and actually pure EVs. So if you exclude the hybrids, the pure EV space is approximately 3.2% of the entire market. So combine this incredible growth and change in demands on the demand side for the likes of EVs, which is only in its infancy, and you combine that to what's happening on the supply side with the amount of investment that's going into renewable. Think of on the investment side, the institutional market has got such a huge focus on everything that's ESG, and renewables fit right into that bucket. So a lot of money is being driven into the supply side of the equation, and you've got the demand side. So that's matching, and that's why, from a growth perspective, we've got really a very important inflection point, where both sides are going to combine to make this an incredible growth story. So,
On this point, Mark, can I ask you a quick question? And I'm just wondering what your thoughts are on this. So I was just over the weekend actually I spent quite a bit of time going through, some of the major automakers, uh, uh, Mercedes and even Ford and GM, and kind of looking at where
Yep.
their timelines are for committing to fully being on EV. And I
Yep.
guess that excludes maybe, semi trucks. I don't know exactly if they segment that separately, but just for passenger vehicles. And so I think a lot of them were either, some of them were as early as 2025, and some of them were like in 2035, like 2030, let's call that. So considering we're
Yep.
taping this right now in halfway through 2021, let's say, 2030 is when a lot of them are going green. Who in their right mind, let's say 5 years from right now, is going to buy a car that is non-EV, knowing that within 5 years there will no longer be combustion
Right.
motors available. So to me the timeline's much earlier.
Well, that's you're psychologically, yes. Why would you go out and buy something that's going to completely lose its value very quickly? I mean, cars lose their value quickly anyway.
Sure.
But in this case, that it sort of accelerates that depreciation. The way I see it is you'll have the diehards that, still want enjoy the sound of that petrol engine.
Right, but that's
It's
going
a
to be the
it's
minority, don't you think?
Yeah, ultimately, yeah. I think the transition will probably happen a lot faster, and I think that's already reflected in the growth rates as we see them today.
Yeah.
5 years ago, no one would have thought that we would have had this kind of growth.
Right.
Um, and I think Elon Musk uh, pretty much said it fairly clearly. Within 10 years, 100% of automobile sales will be EVs.
Yeah. Well,
Um,
that's my point, right?
but
And it's a point that I'm asking this,
yeah,
on purpose, because I think it really ties into our theme of this growth going from steep to basically parabolic here.
yeah, no, and look, so we're talking about, okay, 10 years from now, 100% of vehicles sold will be EVs. It's going to take another 10 years to replace the entire automobile fleet that's out there.
Yes.
So,
Yes.
20 years from now is sort of the event horizon where you probably won't see any more old-fashioned fossil fuel cars, except for maybe a few collectibles that are out there.
Yeah. Well,
I
collectibles
hope
is a different
I hope to
market, right?
keep mine.
Yes, by all means, right? Please do, and there'll be a lot of sentimental rate and I think collector's value there.
Yeah,
But I think the point I'm trying to get my head around is that markets are forward-looking mechanisms. So in 20
yep,
years from now, the story's played its course. I mean, there'll always be new stuff, but I think the real acceleration is here. So,
yeah.
and that's quite
Look,
frankly what the approach shows.
the only thing that you really need to look at is look at the valuation of Tesla. The implied growth in that valuation is very clear. Now, whether you agree or disagree with that valuation, that's a completely different matter. But the
Yeah,
reality is there's a lot of growth implied in that valuation.
yeah,
And
yeah,
it sort of brings us to our next point, which is because of this growth trajectory in the EV space, the other subset that it's going to obviously have a very clear defined impact on is everything to do with batteries, right? Which is why we're invested in the lit ETF. So that's everything related to lithium batteries. And it's not just the battery tech, but it's the entire production cycle of lithium batteries. So for everything from natural resources all the way to the groups that actually produce these batteries. And if you look at the growth rates, if you look at just from 2020 to 2030, so 10 years, we're expecting something like 13x
yeah.
growth.
Talk about exponential growth.
Right, that's 13
And you can
times.
visibly see that here in the chart. And quite frankly, knowing how technology is, we'll probably look back at this chart in 5 years and say, hey, this was a total, underestimation. But we'll see. We'll see. Either way,
Right.
this is nice growth.
The one thing that we will be doing is, while we're getting exposure to all of these subsets through, for instance, lit for the battery space, we will be adding specific unique positions that that are more geared towards new battery technology, such as, you know, I'm sure many of you have heard of QuantumScape or what's the name of this other one that we just
Oh, the
what is
SPAC,
it called? Well,
super
the
something,
SPAC that's, yeah, the SPAC that's working on doing a deal with Solid Power. Okay,
solid
so yeah,
power.
the other company is Solid Power. So we will be adding sort of unique positions like that. QuantumScape, I don't want to add at this stage because I still think it's overvalued. But you know, when the entry point is good on that one, we'll let you know.
Yeah, exactly. Well, listen, I think you know, we want to kind of try to keep it as straightforward and quick to the point as possible. But I don't know if you have any more parting thoughts on this, and if you guys have any questions or comments, leave them down below, or whatever medium you're receiving this, whatever you know, whatever newsletter or whatever you know, platform you're getting this on. Just let us know. We'll be happy to
Yeah.
entertain your questions.
Well, just stay tuned because we'll be bringing you many more growth themes.
Yes, there's a lot of them out there. It's very exciting time. I mean, I wake up every morning and I just look at stuff to do, and I mean, I know you and I have both done this for a long time, but I personally never seen it at a time where there's been more stuff to do and more and like diverse, different, like, you know, asset classes, industry groups. It's just an
Yeah.
incredible time.
Yeah, I could literally spend 24 hours a day just reading and reading and reading and
Yeah.
reading and reading.
Yeah.
Um,
Well, and reading is one
yeah,
thing, right? But there's actually actionable. I mean, there's actionable stuff to do. I mean, I usually do a few trades a day. I'm finding myself doing more like 5 things a day on average. You know,
yeah,
investments and things and all that kind of stuff. You know.
yeah.
So thank you, Mark. Appreciate it. And again, guys, if you have any questions, comments, please let us know, and we'll see you in the next video. Thanks for joining.
Okay, great. Thanks everyone. Bye.